Welcome to this tutorial on VOO versus VOOG, two popular Vanguard ETFs that track large growth stocks. In this guide, we will compare and contrast these two investment options to help you decide which one is best for your portfolio. First, let's start with the basics. VOO is the Vanguard S&P 500 ETF, which tracks the S&P 500 index, a broad market index that includes the largest and most established companies in the U.S. On the other hand, VOOG is the Vanguard S&P 500 Growth ETF, which tracks the S&P 500 Growth Index, a subset of the S&P 500 that only includes companies with growth characteristics. In terms of investment objective, VOO aims to provide broad exposure to the U.S. stock market, while VOOG focuses on growth-oriented companies. This means that VOOG will typically have a higher allocation to technology and healthcare stocks, which are often associated with growth. Now, let's look at the key differences between the two ETFs. VOO has a slightly lower expense ratio of 0.03%, compared to VOOG's 0.04%. This means that VOO is slightly cheaper to own. However, VOOG has historically outperformed VOO over the long term, with an average annual return of 14.5% compared to VOO's 13.5%. In terms of portfolio composition, VOO has a more diversified portfolio with over 500 holdings, while VOOG has around 220 holdings. This is because VOOG only includes companies with growth characteristics, which can result in a more concentrated portfolio. So, which ETF is best for you? If you're looking for broad exposure to the U.S. stock market, VOO may be the better choice. However, if you're looking for a more targeted investment in growth-oriented companies, VOOG may be the way to go. Ultimately, the decision will depend on your individual investment goals and risk tolerance. As a best practice, it's always a good idea to assess your overall portfolio and consider your investment objectives before making a decision. You may also want to consider other factors such as your time horizon, risk tolerance, and overall asset allocation. In conclusion, VOO and VOOG are both high-quality ETFs that can provide valuable exposure to large growth stocks. By understanding the key differences between these two investment options, you can make a more informed decision and create a portfolio that meets your unique needs and goals.